Augustine, what really is keeping a lid over commodities here right now? You just heard from the Komatsu CFO, Sabrin, talking about they're not seeing any signs of recovery when it comes to China here right now. Do you think this whole reopening story in the commodity space has basically been played out?
So basically, China is on a path to recovery, but this recovery is being led mainly by services. As you have seen, the PMI for manufacturing last month was in contraction once again. Services PMI was in a broad expansionary category. So basically, this recovery that we see in China this year is likely to be led by services compared to manufacturing construction. And these are the ones that are commodity heavy. So definitely there is a negative sentiment now brewing towards commodities in general, as well as weak demand from China because of the services going ahead of manufacturing. So definitely, we are likely to see commodity prices weakening this year compared to last year.
How much more, and in which specific commodities do you think we'll see most downside?
So we're already seeing quite a bit of a downside in construction-heavy commodities. So these would be iron ore, steel. We expect further downsides for these two commodities, especially ferrous metals. On the upside, there is still a little bit of hope for the rest of the year with regards to autos demand from the autos industry that translates into demand for copper, demand for aluminium. So in general, if you look beyond 2023, in 2024, we do expect to see a stronger rebound in green transition metals like copper, lightweight aluminium, green steel. So I would say green energy commodities are definitely going to see a brighter future than non-green transition commodities.
How long can the gold and silver rally continue for, Sabrin?
We're definitely bullish, neutral to bullish towards precious metals, including gold. And this is because of the nearing of the U.S. Fed's hiking cycle, the end of the U.S. Fed's hiking cycle. So as we reach terminal rates, the demand for safe haven assets, non-yielding assets such as gold, definitely goes higher. So gold prices are already very elevated right now due to a number of reasons: recession risks, the U.S. dollar trading sideways to slightly weaker, the nearing of the end to the U.S. Fed's hiking cycle. So this is set to be there for the rest of this year. So gold prices are definitely set to go higher. They could even push their all-time highs. They're very close to their all-time highs at this moment. So definitely positive towards gold for this year at least.